All right, welcome everyone to session 2 of Money Smart for young adults. This class is called Check It Out. This class is going to be all about checking accounts. So last week we talked about bank accounts in general. This class is going to be a deep dive into checking accounts specifically. I graded most of your guys' tests from last week and you all did really well. There were a couple questions I saw wrong on several. Some of them involving the difference between deposit accounts and non-deposit accounts. A deposit account is an account you put money into and you take money out of at will. Stocks and bonds are not deposit accounts. They're a little bit different. Also, there were some about the FDIC insured accounts versus accounts that weren't insured by FDIC. FDIC is the Federal Deposit Insurance Corporation. So there's a dead giveaway. It's Deposit Corporation, so it is for deposit accounts. The other one, and I didn't actually mark this wrong, but a couple people got the very last question where it talked about steps to avoid identity theft, and a couple people marked A, writing down your PIN number and putting it in your wallet so you don't forget it. So I didn't mark it wrong, even though it's technically incorrect. So the reason why it's incorrect is because if your goal is to avoid identity theft, you don't want to write your PIN number down anywhere because it's meant to be completely secret that only you can know. And if someone steals your wallet, they have your debit card and they have a piece of paper with your PIN number on it. So now they can take money out of your bank account using your debit card, and there's nothing you can do about it. And speaking as someone who worked in banking, when that actually happens, if the criminal got your PIN number, you can't prove it wasn't you. So most of the time, you won't get that money back. Like, we can talk a little bit about debit card purchases and fraud protection and stuff, and there are things like that where if someone steals your debit card and buys things in your name, oftentimes you can get that money back. But in that case, if they have your PIN number, you're not getting it back. So that one is technically incorrect. Even though I understand why you put it there, because you don't want to forget your PIN number. It is very important, but it's important. It's a 4-digit number. Memorize it. Make it something you're going to remember, and don't write it down anywhere, because if they get it, they can get money out of your bank account. Okay, so that's it for last week. Let's go over our pre-test for this week. All right. Question number 1. Which of the following statements is not true?
B.
You guys think B? Checking accounts are only for rich people. Yeah, no, checking accounts are for everybody. Okay, number 2. Which of the following is not an example of a common type of checking account? Remember, this is a pre-test, so if you don't know the answer to these, that's okay. These are... Nope, there is such a thing as free checking. It's less and less common. Interest-bearing checking, there is such a thing as interest-bearing checking. So this question is actually kind of tricky because all of these are real types of checking accounts. They're just not very common. The one that's least common is C, per transaction fee checking. So in my experience, the only per transaction fee checking accounts are out there are business accounts. And the reason why is because some of those business accounts have thousands of transactions per day, and it becomes a huge accounting issue for banks. And so that's why they charge based on your volume of transactions. So that's a business account thing. So if you guys are opening a personal student checking account, chances are it's not going to be that type of an account. All the rest of these are possible types of account for you, and this is a big part of what we're going to talk about today. Number 3, when you write a check and the check bounces, the bank will charge you a fee. First off, who knows what bouncing a check means? Okay.
You don't have money in your bank account, so like you're pulling money from the bank.
Yeah. The check comes in to take money out of your account, and there's no money in there, so it bounces. The check is no good. The person cashing the check does not get their money, and the bank charges you a fee. And what is that fee called?
Overdraft or non-sufficient fee.
That's right. It's either one or the other. Overdraft is where they cash the check. They allow the check to go through. They pay the person who presented the check, but they allow your account to go negative. And then they charge you a fee, causing you to go even further negative. A non-sufficient funds fee is they don't cash the check. They say, sorry, no, this person doesn't have the money. We're not paying you. And they still charge you a non-sufficient funds fee on your account. All right. Number 4, select all that apply to withdraw money from your account. You can.
A and B.
A and B is correct. You can use an ATM card, or you can write a check to cash and go to a teller. Credit cards will not take money out of your checking account. Neither does a stored value card because it's not tied to a checking account. Number 5, to open a checking account, you will most likely need to provide the bank with what?
A.
Yep, it is A. Photo ID, social security number, and money to deposit. All right, someone who is not Logan, answer the next question. Number 6, direct deposit is a way to keep your money safe because
B.
you cannot withdraw it once you deposit the check. That is incorrect. You can withdraw your money after the check has been deposited.
Is it D?
It is D, correct. Your check goes directly to your bank account. There's no risk of misplacing it. Direct deposit is seriously one of the greatest financial inventions, if you can call it that. It is a hugely beneficial thing. I highly recommend direct deposit. Number 7, electronic banking services include all of the following except, now the key here is electronic banking services.
B.
Text message alerts. Nope.
Is it
A.
D? D. Debit and
No.
Is it
I.
A?
You know, it's a good thing this one isn't on the test because this is a stupid question. The answer is C, calling the bank on the phone. Because it's not electronic.
That's like
Oh.
the barely qualifies for like financial
Oh,
tests.
I could debate that because phones are electronic too, but whatever. Anyway, this one's not for a grade, so whatever. 8, which of the following statements are false?
B.
Correct.
And A.
B. No, A is true. The check register is a tool for you to keep track of your account balance. That's what it's for. But B, if you make a mistake in your register and overdraw your account, the bank will not charge you. That is not true. If you make a mistake and overdraft your account, they will absolutely charge you. Banks are for-profit businesses. They have a list of rules that you have to follow, and if you break one of their rules and overdraft your account, they're going to charge you. That's it. All right, number 9. Which 2 of these will best help you determine if a particular checking account is right for you?
C.
Yes,
And
C
A.
is one of the correct answers, and A is the other correct answer. Ask the bank what the fees are so you know if you can get a better deal somewhere else, and ask about different services. Number 10, select all that apply. In order to add money to a checking account, you might, what are some ways you can add money?
D.
D, deposit cash at the ATM. That's correct.
C and A.
C is incorrect. Writing a check out for cash is a way to take money out of your bank account. What's the other way that you can add money to your account?
A.
Is it B?
A. It is A. Fill out a deposit slip and give your deposit to the teller. I suppose you could technically do B, cash your paycheck and then send your cash deposit through the mail, although I highly discourage ever sending money through the mail. You can technically do that if you mail cash in an envelope to your bank and ask them to deposit it for you with a deposit slip. They'll put it in your account for you, but it's a very bad idea. Don't ever mail cash. If you're going to mail money, write a check and mail a check. Because cash, if anyone else gets that mail, and there are criminals out there who will take mail out of mailboxes and open it and see if there's something in there that they can steal, they're going to take the cash, and it's gone. Whereas a check is much harder to steal. All right, number 11, reconciling a bank account means,
B.
I had B too.
no, it is A, and this question is actually in the test, and I'm going to be striking it because this is something we don't do anymore. So this goes back to the fact that this class was made in 2010, back when a lot of people were still balancing their checkbook, which honestly, with online banking becoming as advanced as it is, nobody really does that anymore. So there's like a whole section of this that we're going to skip over because by the time you guys are really like managing your bank account and everything, you're not going to do it. No one does. It's just a fact of life. It isn't a bad idea to do it. You know, if you want to take the time to fill out a checkbook register and write down all your transactions and reconcile it to the bank to make sure that everything matches, go for it. It's not a waste. It's just that the chances that there's going to be an error that you can do something about are very, very small, and it takes a lot of time. It's kind of labor-intensive thing, and in practical, real-world situations, you're just not going to do it. So I'm not going to teach it. We're just going to move on because there's plenty of other stuff in this lesson that's going to take up our time. All right, number 12. A debit card is
C.
C, similar to a gift card since you buy the debit card and replenish the funds once a month. Wrong. You don't buy debit cards. Debit cards are provided to you for free unless they have a debit card opening fee. It is A, similar to an ATM card, but you can also use it to make purchases at retail locations. Funds are withdrawn directly from your checking account. Correct. 13. What's the best way to avoid overdrafting your account or bouncing a check?
C.
Yes, record all of your transactions. That goes back to that checkbook ledger or balancing your checkbook. Or B, check your account balance regularly. That's another really good way. In fact, that's going to be the one that you're actually going to do in real life. Check your balance and know what transactions are going through there. 14, all the following are steps to balancing and reconciling your checking account except, yeah, this is another pointless question. It is C. C is the correct answer. Compare your checking and savings account balances. That makes no difference when you're balancing and reconciling. All right, last one, 15. When you take money out of your account, more money out of your account than you have in it, that is called
C.
an overdraft. Correct. Good job. All right. That took 10 minutes. All right, let's get into this. Okay. The objectives of today's class, we're going to state the benefits of using a checking account. I feel like we already did that in our first session, so I'm going to kind of skip that in the interest of time because we have a lot to cover today. Determine which checking account is best for you. We will spend some time doing that today. Identify the steps involved in opening a checking account. Again, I feel like we covered that last week. Add money to and withdraw money from a checking account. We'll go over that a little bit. It's pretty easy. And then reconcile check register with a bank statement. We're going to skip that section entirely because that's a very 2010 thing to do. People don't really do that anymore. Moving on. Checking accounts. We talked about checking accounts before. Benefits, convenience, cost, better money management, and safety. We talked about all this last week. Convenience, you have a debit card. You can buy things at the store while not having to carry cash. Cost is cheaper than using check cashing services. Better money management and safety. Your money when it's in the bank is safe from theft or fire or whatever, things like that. Let's look at activity 1, comparing costs. So let's see. Let's do scenario 1. Do we have a volunteer to read scenario 1 for us?
Tony cashes his weekly paycheck at Fees for Cash. Cash checking service. Fees for Cash charges Tony $5 to cash every check. How much does Tony pay Fees for Cash each month to cash his paychecks?
Yep. So let's work this out. He pays $5 to cash every single check. He gets a weekly paycheck. So how many times is he paying this fee every month? 4 times a month. So what's that every week? Basic math. What's he paying in fees a week or a month? Sorry, a month. 20 bucks. 20 bucks a month. $20 a month. And there may be some weeks where he pays $25 depending on the day he cashes his check. Yep, 240, well, more than that. So if you really wanted to get technical, there's actually 52 weeks in a year. So you can take $20 or $5 times 52 and you would get the exact answer. But it doesn't matter. The point is, a lot. More than the monthly service fee for a checking account with direct deposit. Scenario 2. Who wants to read scenario 2 for us? Owen.
Book, bro.
Which page is it?
Page 11.
Page 11. So how much did Lamar pay this month in fees when using his stored value card at an ATM? What's the fee for every ATM transaction? $2. And how many times did he use it this month? 4 times. So what did he pay this month? Simple math, guys. $2 fee, 4 times a month.
Oh,
$8. Yeah. All right. Scenario 3, Sylvia. Who wants to read that one? All right, Roger.
Sylvia has a checking account. The bank charges her a monthly fee of $6 unless she uses direct deposit or her debit card more than 5 times per month. If Sylvia uses direct deposit or her debit card frequently and she uses no more than 1 box of checks every year, which costs her $18, how much does she pay to maintain her checking account?
Yep. So how much is she paying a year for her checking account?
$6.
Nope.
$9.
Nope. 18. Why is it 18?
Because it says she uses her card multiple times, so she wouldn't have to pay the $6 fee.
That's right. So the bank has this $6 monthly fee unless she uses direct deposit or uses her debit card more than 5 times per month. So if she gets direct deposit, she doesn't pay the fee. If she uses her card 5 times a month, she doesn't pay the fee. So that $6 fee means nothing. She gets it waived every month. So the only cost is her book of checks, which cost $18.
Is the $6 fee? I'm guessing that's more now based than it was in 2010. The fee be larger.
It depends on the account, and you'll find this when you guys do your assignment of shopping different bank accounts in different places. Every bank has a different monthly transaction fee, and almost all of them have some type of criteria you can meet in order to waive that fee. In fact, most student accounts waive the fee just because you're a student. And what you need to pay attention to when you're comparing those is how they define a student. So a couple examples of that. I worked at 2 different banks in my career as a banker. I worked at PNC Bank. Their requirement was you presented a student ID when you opened your account. They put a student code on that account and it counted for 6 years. For 6 years, you got no monthly maintenance fee on that account. Done, 6 years. And then at the end of that 6 years, if you were still a student, like in college or whatever, you could go back again, show them a new student ID, boom, another 6-year period. And you can just keep doing that as long as you're a student and you have a valid student ID. I also worked at Regions Bank, another large national bank. Their student account is for anyone under age 26. If you are 25 or younger, free student account, no monthly maintenance fee. Once you turn 26, no more free account. So you just got to pay attention to that and figure out which one's going to be the best for you. All right. That was it for those. Butter money management, we already talked about that. Safety, talked about that. Okay, here we go. Types of checking accounts. So let's see. Here are the different types of checking accounts. First, you have free or low cost checking. Usually that's going to be the student account, or it's going to be, the student account's going to be a variation of whatever free or low cost checking account the bank has. These accounts typically don't give you any interest. Interest-bearing checking is a separate category. They're just like the standard low-cost accounts. They usually don't have a lot of extra bells and whistles, you know, like extra stuff you can get. Like interest-bearing checking are like, probably most of your parents probably have interest-bearing checking accounts because they have a decent amount of direct deposit going in every month, they have higher balances, and they get extra perks like free checks or no ATM fees or free money orders, you know, all kinds of different little things that come with an interest-bearing checking account. Also, of course, they earn interest, thus the name interest-bearing checking. Then you have free low-cost checking, which is just a basic level account. Probably gets a debit card. You probably have to buy your checks, all that sort of stuff. Electronic only and ATM checking is another way for the banks to save money. They, let's say they don't have free checking anymore. A lot of banks don't, honestly, have free checking anymore. Like that is kind of going away, and checking account fees are going up because banks are just not making money. So some of them have moved to only an electronic checking account is free anymore. And it basically, it works just like the free or low cost checking with the one caveat that you can't go into the branch. You have to do everything through ATM, online banking, direct deposit, all that sort of stuff. You can't go into the branch and make a deposit or withdraw or anything like that. So that's electronic only checking. And then regular checking is regular checking. I don't even know why it's a category. It's the same thing as all the rest of these. Okay, activity number 2, types of checking. Who wants to read about Jasmine's mother?
I can read that.
All right.
Jasmine's mother, Caroline, is a single mother who works as a physical therapist in a local hospital. Her hours are varied, and she often cannot get to the bank during normal banking hours. She pays most of her bills online, like her mortgage, utilities, and telephone bill, and uses her debit card to make many purchases. Jasmine's father uses direct deposit to transfer his child support payment into Caroline's.
Good. What type of banking account do you think is going to be the best for Jasmine's mother? Is it going to be
Free, low-cost checking. The online, electronic only to
That's right. Electronic only account is great for her. She doesn't get to the bank during normal banking hours anyway. She pays her bills online. She uses her debit card, and she gets direct deposit. None of that involves having to go into the bank branch. So in order for her to get an account that doesn't have monthly fees, the electronic banking is going to be a good option for her. All right. Todd's parents. Who wants to read that one? All right, Logan, go ahead.
Todd's father works at the local warehouse distribution center. Todd's mother does not work. They rent their home and the bills for water, heat, and electricity are included. They pay for their groceries with an ATM card and also use it for other expenses. They do not write many checks.
All right. What type of account do you think is going to be the best for them?
Free low-cost checking.
Yep. Free low-cost checking is probably their best bet. They don't have a really high income. They pay their bills with they pay rent, and all their bills are all in one payment. So they buy their groceries with an ATM card and use it for other expenses. They don't write many checks. Yeah, so a free low-cost checking is going to be their best
Why would
option.
anyone not choose the free or low-cost checking?
Because it doesn't earn interest.
Okay.
And it doesn't get extra perks. Here in a few minutes, we're going to start looking at the different fees and different services that banks offer, and there is a definite difference between a free low-cost checking versus a regular checking or an interest-bearing checking. Most banks have like 3 tiers of accounts. They have the free low-cost one, which literally is just the basic stuff. You stay out of the branch, you do everything online, but if you ever need like a replacement debit card, you're going to pay for that. If you ever need to put a stop payment on a check, you're going to pay for that. Like all these other things you're going to have to pay for, versus the other higher tier accounts get a lot of that stuff for free as well. Question?
So when you say the interest in the account, is that like point something percent that's...
Yes. So getting a higher level account just so you can earn interest on it doesn't really make sense, because the interest rates on these checking accounts is so low, it's almost worthless. So if that's the only reason, then yeah, you can absolutely just go with a free low-cost account. And a lot of people do. But one of the most common ways to avoid monthly maintenance fees on any checking account is your direct deposit. And the amount of that direct deposit dictates what type of account you can get without a monthly fee. So like if your direct deposit is $500 a month, you're a student, you don't make a ton of money, you can get a free or low-cost checking. The direct deposit requirement might be 500 bucks. Versus a mid-tier account, like a regular checking account, might be interest-bearing, might require direct deposit of like $2,000 a month. And with that, you get your first book of checks is free. You get like free replacement debit cards, you know, that kind of thing. You get one free wire transfer a month or something like that. You know, just a couple extra perks to save money on things you may or may not use. And then like the high-tier accounts might require direct deposit of like $5,000 a month. If you're a pretty, you know, you're a pretty good wage earner, you're settled in your job and everything, you might get the highest tier account, which gets all kinds of fancy perks. Like ATM fees are a big deal. ATM fees, well, I'm getting ahead of myself, but pretty much everything for free when you have the highest tier account. Let's see, Ramon's parents. Who wants to read that one?
What's the downside of the high tier?
The fee is higher if you don't meet the criteria. You get laid off and you're not getting that $5,000 direct deposit anymore. Now you're getting that monthly fee and you got to change your account or just pay the fee. All right, who wants to read Ramon's parents? All right, go ahead.
Ramon's mother and father own their own business. They started as a small grocery store, but have been able to grow the business into a large supermarket with nearly 100 employees. They work very hard and are careful not to spend money needlessly. They pay themselves a regular salary, which they put in a checking account and pay to pay the household bills and living expenses. They often make purchases with a debit card, but they pay most of their bills by checks.
Yep, so what kind of account do you think is best for them?
Regular check.
Regular or interest-bearing checking?
I think they sound like they're pretty well off, so
Yeah.
interest-bearing check.
Yep. Yeah, they also mentions that they work very hard and are careful not to spend money needlessly. They might have a little bit higher balance in their checking account than other people, so they might benefit from earning a little bit of interest on that. And if they pay most of their bills by check, one of the important things, probably one of the biggest benefits of the interest-bearing accounts or higher tier accounts is they get free checks. Like as many checks as they want. If they need more checks, they get them for free in a lot of cases. All right. This next part, talking about choosing a bank and checking account checklist. So this is where I'm going to get out of the slideshow for a minute, and I'm going to show you guys a real one. If I can get out of here, here we go. Okay, so before we started, I went ahead and did some research. I went to, PNC is the one I'm most familiar with. I used to work there, so I know them pretty well. But for your homework assignment, you're going to need to go to bank websites and you're going to look for like their fee schedule. That's how you're going to do this homework assignment you have. So from the beginning, you look for, so in this case, we would click on products and services. Well, here, why don't I tell you guys, or have you guys tell me what to do. So we're going to click on products and services. What would you click on next if you want to find the fee schedule for like a...
The projector moved over.
Ow! Hang on. Okay, I don't know if you can even read that.
Yeah, I can.
What do you think? Somebody throw out an idea. What should I click on?
Checking right there.
Checking! Yep.
Sir.
We're looking at checking accounts. Alright. Checking at PNC is virtual wallet.
Explore account details.
Explore account details. Good. Sure, homes, good, blah, blah, blah. That's different. We don't want to apply now. We're just looking to get details. Cash mode. Alright, what do you guys think? What should I click on now? I don't know if you can read that.
The virtual wallet, find printer, virtual wallet fee, features and fees.
Features and fees. That's what you want to click on. Here we go. This is what you want to find. A document that looks like this. And pretty much every bank has a document that looks very similar to this, where it has all the features and the fees. So if we look at this account, we'll just look at this for a second. So the minimum deposit to open the account, because one thing you need to open a checking account is money. You gotta have some money to put in there. Here's our monthly service charge, $7. Here's the different ways you can waive that monthly service charge. $500 combined average monthly balance, $500 in direct deposits. If you're a senior citizen, if you are over age 62, or if you're a PNC employee. This account does not earn interest. This is a basic free or low cost account, right? And then here's some other fees here. So we got a debit card is required. There's no charge for it. Some specialty cards. Here we go. Card replacement fee. If you lose your card and you need a new one, $7.50. If you need to expedite it and mail to you like overnight, it's a $25 charge. ATM transaction fees. If you use that bank's ATMs, you typically don't pay an ATM fee. You pay an ATM fee if you go to other banks' ATMs, non-PNC Bank ATMs. $3 charge. Now pay attention to this. Here's something important for you to remember. That ATM fee is what your bank is charging you for using an ATM that's not that bank's ATM. The ATM you go to will also charge an ATM fee because you're not an account holder at their bank. That fee is separate and on top of this fee. And it varies based on where you go. So, like for example, you guys go to gas stations, they got those little ATMs in there all the time. Those usually aren't managed by any major bank, and they charge pretty much every single person that goes to that ATM. You're paying for the convenience of getting cash out of your bank account at a gas station, and the ATM fee might be $2. So if you go to that ATM and pull out 40 bucks, how much money is going to be taken out of your bank account?
42.
45. $2 for the ATM in the gas station, $3 for your bank. See how that works?
Banks like to gang out numbers together.
They do. Everybody gets a cut. Everybody gets a cut. If you are out of the country, the fee is higher. $5 for using an ATM in Guam, wherever, anywhere out of the country. Oh, I was also going to say that $2 fee that other bank charges, it varies based on where you go. Some of them it's $2, some of it's $3. If you go to those ATMs at like sporting events or carnivals and things like that, sometimes you will see ridiculous ATM fees. $5, sometimes $10 to use that ATM. So if you're going to a place that you know is going to take cash for things, bring cash with you. You don't want to pay those ridiculous high ATM fees. All right. Cash advance fees. There's really no reason to ever get a cash advance on a debit card, but if you did, it costs $3. And if you got one somewhere else, it would cost $5. International purchases. This is kind of significant, actually. Let's say you're not going out of the country, but you're buying something from another country, and you're buying it from that country's, or that business's website operated in that other country. If they are not using a United States-based bank to process that transaction, even though you're in Missouri or wherever buying something, your bank will charge you an international transaction fee, and 3% is pretty standard. So keep that in mind if you're going to buy something from somewhere else. This is a fee that will apply, 3% of whatever you bought. So if it's $100, it's a $3 international transaction fee. Overdrafts, $36 per item. Each transaction that you do that brings your account negative is going to be another $36 fee. So if you had $20 in your bank account, you bought something for $30, your account goes $10 negative. Then the overdraft fee, $36. Now you're $46 negative. And the only way to fix that is to make a deposit for over $46 to get your account back in the positive. Now this bank particularly has another fee, or at least they used to. They might have gotten away, put that away. Let's see if it's in here. They're not. They must have removed it, so I'm not going to talk about it. But pay attention to overdraft fees. Overdraft balance threshold, they do give you a little bit of a grace. If you draw your account less than $5 negative, they won't charge you an overdraft fee, so that's nice. Pay attention to things like that. And that's it really. Statements. So here's another fee you have to watch out for. Banks nowadays, with everything going digital, they like to send you online bank statements. And if you want the paper ones sent to you in the mail, they charge you for them. And when you go to open the account, sometimes it isn't clear, how they're going to do it. So you want to make sure when you open your bank account, you opt for whichever option you want, because it varies. As you can see here, this account gives you online statements for free. If you want them in the mail, they charge you $2 per month per account. And if you want a paper statement with check images, little pictures of whatever checks you wrote that cleared that account that month, they charge you $3 per month. Wire transfers, checks, counter checks, those are like if you don't actually buy a book of checks, you can go to the bank and just ask for a check, and they'll print you out a check for $1.50, and you can write that check for whatever. Question?
Why would you need bank statement with pictures of the checks?
You probably don't.
Can you keep, isn't that the whole point of writing checks, to like keep track of it as you write them, so why would you need a picture of the checks?
So, the two biggest reasons anyone ever wants a check image is, number one, you forgot what that check was for. You wrote it 2 months ago to so-and-so, and they waited forever to cash the darn thing, and then it finally goes through, and you're like, what the heck is this $25 check? I didn't write a $25 check. What is that? So you go back and look at it. That's number one. Number two, if you're applying for a loan, especially mortgage loans, large deposits especially, oftentimes the bank or the lender wants to see an image of that check so they can see what it was. Whether it's a large purchase or whether it's a large deposit, like images of deposits, they want to see those too. Now, all of that can be accessed through your online banking. So if you're tech savvy, you can probably opt for the free version, no charge online banking, and not have to worry about any of those fees and getting your bank statements in the mail. Which also, by the way, another reason to go for digital statements versus paper statements is because, like we talked about before, there are people out there that steal your mail. And that's one of the biggest things they're looking for. Because your bank statement has your bank account, has your name, your address, all kinds of useful information, and of course how much you've got in that bank account on that statement. And if they get their hands on that, they can take advantage of it to use it to try to steal your identity, steal money out of your account, all kinds of things. So another good reason to opt for online statements. As you can see, fees. There's all kinds of fees for all kinds of different things. So pay attention to all that. And that is the reason for your homework assignment, to look at 3 different banks' version of this document and compare them to figure out which one's going to be the best option for you. And you will see they will be different. There'll be minute differences in some cases. One bank's ATM fee will be $3, the other bank's ATM fee will be $2. One's monthly fee will be $7, the other one's monthly fee will be $10. Just all these little things. But when you go to open this bank account, this is going to be your bank account that you're going to use for probably the next 10 years of your life. So you want to make the best choice you can. So pay attention to that stuff. All right, moving on. We just talked about the fee schedule. Understanding bank fees. I feel like we already did that, so let's go ahead and skip that. Opening a checking account. We already talked about that. You're going to need your photo ID, your social security number, and opening deposit. If you're opening a student account, they may want to see some kind of student ID. Maybe when you're homeschooled, you can't really do that. But anyway, account verification. We already talked about that. Okay, activity number 4. Are you ready for a checking account?
Yes.
Yes.
Maybe so.
14.
Let's take the test. There is a, where is it? What page is it? Do you guys see there's like 5 questions that you answer? What page is that? Anybody know what page it is that has like the 5 questions?
26.
Activity 4? Page 26.
19, actually.
19.
Page 19. This is being recorded. Come on, guys. All right. Question number 1. Do you work at a job where you are paid by check? Yes or no? Now these aren't right or wrong answers. These are for you, obviously. Do you have bills for which writing a check would be convenient? Yes or no? Do you purchase money orders? Yes or no? Do you ever lose cash or find it disappears quickly? Yes or no? Do you regularly keep track of the money you have and how you spend it? Okay. If you answered yes to 2 or more of these questions, a checking account is probably a good idea. However, if you answered no to the last question, you might not be ready for a checking account. If you don't keep track of the money you have and how you spend it, you will get into trouble. You run risk of overdrafting your account and causing bank fees to take a whole bunch of money. You have to keep track of what you have to avoid overdraft fees and develop a good banking relationship. All right. How much time we got? 43 minutes? All right. Using a checking account, you will typically get an ATM or debit card, a checkbook, and a check register. Sometimes they're still giving those out, sometimes they don't. We're not really going to talk about check registers or checkbooks because nowadays they're very few and far between. So we're going to skip a bunch of this stuff. Deposit slip, deposit cash, endorsing a check, signing it back, depositing a check, mail deposits. We already talked about mailing deposits. Never send cash through the mail, right? You guys heard me say that. Don't ever mail cash. Direct deposit, ATM deposits. I'm just skipping through a bunch of this stuff. Okay, steps to writing a check. All right. Is there a page with like an image of a check on it?
24.
What page is that? 24? Everybody turn to page 24. So step 1 to writing a check actually has absolutely nothing with writing the check. What's step 1 to writing a check? It's on the screen.
Easier and faster.
Make sure you have enough money in your account. Why?
Because you don't want to get overdrafted.
You don't want to overdraft. I'm beating this really hard because this is like super important. This is the most important thing for you if you're going to have a bank account. Do not overdraft your bank account. Those $36 fees add up. And there are many people. I was in the banking industry. I was a banker for 6 years. And I can't tell you how many times I had to counsel people on how to get out of being grossly negative because of one mistake, one bad decision. They wrote a check, they forgot about it, they paid a bill, and then bought gas and groceries. Whatever reason, they didn't keep track of their balance good enough, they were too close to the wire, they overdrafted, and it caused a snowball effect. where the first transaction brings them negative, then they get the $36 fee, then 2 other transactions that hadn't posted yet, maybe they were things they had used their debit card with the day before, then they post, 2 more transactions, 2 more $36 fees. Before you know it, they're $150, $200, $300 negative in their bank account. They get paid every week. Their paycheck's $300. How much is going to be in their account on payday? 0. Because they were $300 negative. Super important. So if you learn nothing else from these past 2 weeks, pay attention to your bank account balance. Don't let it go negative. A good idea is to keep a cushion of $100 or $500 or whatever you can afford and treat that as 0. I never allow my bank account balance to go below $100. Something like that is a good idea because you can forget something. Or if you have the discipline, keep a checkbook ledger so you know exactly what's going on in your bank account at all times because you're writing it down and keeping track of every transaction you make. Okay, writing a check. All right, this is a check. So here's the parts of a check. You have your name, your address, all that stuff on the top of your check. Can you guys see my mouse? Okay. So this is kind of what a check looks like. First, in the top corner, you have your name and all your information. And then at the bottom, you have these numbers down here. Now these numbers are important. This first one over here is the bank routing number. That basically tells, the bank that's cashing the check, this is the code for the bank that your bank account is with. This second number is your actual bank account number. Now this is one of the big reasons that you need to be very careful about your checks. If you get checks, don't lose them. Don't leave them laying around where someone can get a hold of them or anything, because this number is your bank account number. And that is what the fraudsters can use to try to take money out of your bank account. So you want to be very careful there. And then this last one is just the check number, which doesn't match up here, which is funny. Whatever. Anyway. So when you write a check, here's what you need to write down. First off, you're going to write the date. So let's just go ahead, write a check to whoever you want for whatever amount you want. I don't care. Let's just practice this. What's today's date?
4/19/22.
Yep. Put that in there. Secondly, pay to the order of. What do you think goes there?
The person's name.
The person you're writing the check to. Yep. Whether it's an individual or a business. You're going to write down the name of that person that money is going to. And then over here, in these 2 boxes, you're going to write down the amount of the check. This first box with the $sign next to it, you write it down in numeric form. $100, 100.00, and make sure you write it out as a full number with dollars and cents. And then on the bottom line, you're actually going to write it out in, I don't know how to describe it, but in letters. $100. And also, a good practice is to put the cents portion in there as well. You don't have to write out the cents portion, but a lot of people will write it as like, if it's 50 cents, they put 50-100 or something like that. That's a very common way to do it. Yeah. So the reason this is important is because one thing the person you write the check to can do if you don't write this stuff down, that's called a blank check.
There's multiple movies about it.
Yeah.
Yes! You guys ever seen Blank Check? They made like 2 different versions of this movie. This kid got a check that didn't have the amount written on it. He wrote whatever amount he wanted on there, and he cashed it. That can actually happen. That's why we have 2 boxes, and you need to write down the amount on both of them so that it's very clear. All right, and then you have the memo line. So this actually, you don't have to write anything here. This is for your own personal record keeping. If you are the type of person that gets check images, you can write down what this check was for. So if it was for your housekeeper, you can put for housekeeping. Or if it was for piano lessons, you can put it was for piano lessons or whatever. A very common one for this is when you guys grow up and you own your own car, you're gonna have to pay personal property taxes in the great state of Missouri. And you will have to write a check for your personal property taxes, and they require you to put down like a reference number on that check. You would put that in this memo line. And then lastly, you have to sign the check. This check is worthless to the person you're giving to if you didn't sign it. The worst thing you can do is do a blank check that you've signed it, but you didn't put the amount in there. That's the worst thing you can do. So a good practice when you're writing a check is to start at the top and work your way down, and the very last thing you do is sign the check. All right? Cool. So here's an example of what it should look like. This guy wrote a check to Best Tees for a shirt, $19.75. There's that fraction that I was telling you about that he writes the cents on the memo line.
For the rest of the line.
So they can't add anything at the end.
Oh, so you should cross that out. So no
Yeah,
nothing.
so one thing fraudsters can do is try to add extra stuff in there, like especially at the beginning of the check is where it's most important. Make sure you start writing at the beginning of the line. Don't write $19.75 way over here and leave all this blank, because they could write in $119. And that would be illegal.
But then
They
they would
would
all
get-
go to Best Tees, not to the
Well, yeah, this would be, so
Best Tees would be getting more money.
the one you wrote the check to is the one that can fraud you doing these kinds of things. All right.
Yes.
Overdraft fees. Once again, when you write a check without having enough money in your account to cover it. Here's another important thing. There is such a thing called check fraud. Now this goes both ways. The kinds of people that write 100 and in front of the $19 and try to cash a check, they can go to jail for that if you can prove it. And you can go to jail for knowingly writing a bad check. Writing a check when you don't have the money in your account. Now this gets people into trouble sometimes. Some people fall on desperate times and they need to pay their utility bill. They don't get paid until Friday. On Wednesday, they'll go ahead and write that check and put it in the mail, hoping that they won't cash the check before they get paid on Friday. That's illegal. Because if their utility company deposits that check, we didn't even talk about that, but banks also charge a fee called returned check fee. A returned check fee is if you get a check from someone else paying you for doing something. Say you mowed their lawn. They write you a check to pay you for mowing their lawn. You take it to your bank and deposit it in the account. Your bank takes that check electronically to the other bank, wherever they bank, and says, hey, this guy gets this money. They didn't have the money in their account. They say, no, we're not paying it. Your bank will charge you a fee for depositing a check that wasn't any good. You had no idea.
So we shouldn't accept checks.
Yeah. Yeah.
Unless we know how much they have in their bank account.
Actually,
We don't.
yes. Don't accept checks from people you don't know. Craigslist, Facebook Marketplace, things like that are rampant with check fraud. People will buy something from you. You put something on Facebook Marketplace. You're going to sell your bike. Some guy comes to your house and looks at your bike and says, yeah, it looks great. I'll pay you. Hey, I forgot my cash. Can I write you a check? You don't know this guy from Joe Schmo. He could absolutely write you a bad check. And it happens a lot. So be very careful about who you accept a check from. All right. We're almost done. I want to talk about opting in and opting out. So we've talked a lot about overdraft fees. There are some things you can do. The number one most important way to avoid overdrafts is to keep track of your balance. Keep track of how much money you have. Question?
So how come the people that give you checks when they go lay out money in the account, why does the bank not give them an overdraft fee?
Oh, they do. They do.
So they get an overdraft fee, but
Yeah.
they end up,
Yeah.
you get it too?
You get a different fee, yeah. Yeah. So here's the reason why. Number one, maybe they just screwed up and weren't keeping track of their balance and did that. You suffer too. Or two, that check they wrote you was from an account that isn't even open anymore. They're just writing you a check knowing that they're frauding you. They're on purpose deliberately tricking you by writing a check that's not even real.
But you have to be stupid enough to do that. So technically.
There are tons of people that are stupid enough to try to steal from you. There are tons of people. I can't tell you how common this really, really is. Ask your parents. They've probably either been a victim of check fraud before or had someone at least try to commit check fraud on them before. Craigslist is rampant. Here's when I was working at the bank. You know what? I don't have time to go into this. We're running out of time. We got to talk about overdraft fees or ways to avoid overdraft fees. Number one, keep track of your bank account balance. Keep track of all the transactions that are going to be going through your account and make sure you don't go negative. Here's some other ways you can avoid overdraft fees. Number one, and the easiest, something you do when you first set up your bank account is your opt-in, opt-out question. Now, when you open your bank account, the bank is going to ask you if you want to opt in or opt out. Now, what this means is this is a setting on your debit card. And the way it works is when you go to the grocery store to buy your groceries and they run your card through that machine, it is automatically checking instantaneously with your bank to make sure that you have the money in there to pay this transaction. If you are opted in and you don't have money in there to cover this transaction, they will still approve it. You can buy your groceries and your account will go negative. If you are opted out, it will decline your card at the cash register. You'll be embarrassed. You won't get to buy your stuff, but your account won't go negative. This is something you have to decide for yourself, which setting you want. So the pros and cons, if you're opted in, you can buy your groceries. And if you know that you're drawing your account negative, you can run to the bank before the end of that day and deposit cash and avoid getting an overdraft fee. If you know that, they're not gonna well, some of them, there is such a thing nowadays as bank alerts, like text alerts. Highly recommend setting up text alerts on your account. Like I get a text alert every time my card is even red, so I know. But that's option A, opting in. Opting out, they won't even do it. They'll decline your card at the store, which can be this embarrassing moment. Oh my gosh, my card's declined, I'm so sorry. Put my stuff back, I can't pay for it right now. But it saves you that overdraft fee. All right? I recommend opting out, but that's just me. There are also overdraft programs. Now this comes into play when you have multiple bank accounts. The most common variation is a checking and a savings account. Your checking account is the one your direct deposit for work goes into, your debit card is attached to, all that stuff. Your savings account is a separate account just for saving money, right? Most banks have an overdraft protection service that you can opt in for where, are you guys paying attention? Listen to this is important. Overdraft protection is where if your account, your checking account goes negative, it will automatically transfer money from your savings account to your checking account to cover that overdraft and not charge an overdraft fee. This is a really cool thing, really, really helpful. There are a couple drawbacks though. Number one, savings accounts are required by government law that you can't have more than 3 transfers out of that account per month. So if you're like habitually running that card and just going negative and going negative and going negative and it's transferring money from your savings over and over and over again, it's going to break that savings account and they will convert it into a checking account and there will be fees associated with that. Second reason most banks charge an overdraft protection transfer fee. Now, it's not an overdraft fee. It's not $36. It might be $10 every time you use that overdraft protection. They'll charge that fee. Sometimes. That's one of the fees on that chart. I'm pretty sure it's on there. You want to pay attention to that. Because some banks don't have a fee to do that. Some of them do. All right. You had a question. Did I answer it already? Okay. All right. Talked about opt-in, opt-out. Talked about overdraft programs. I think that's pretty much it. Oh yeah, one more thing. One more quick thing. I know we're over time, but one more thing. There is a page that talks about the differences between debit cards and credit cards. Page 27. There is a breakdown of the difference between debit cards and credit cards. So here is the fundamental difference between those. A debit card or an ATM card is tied directly to your checking account. And when you run that card at a store, the money comes directly out of your checking account. Credit card is a separate account. It's a loan. So the way a credit card works is, let's say you have a credit card with a $200 limit. That's how much you can spend on that credit card before it's maxed out, and they won't let you spend anymore. Doesn't cause overdrafts or anything like that. But you have until the end of the month to pay that back, otherwise they charge you interest. Now we're gonna have another class later on that goes a deep dive into credit cards and how they work and all that, but this is just the basic fundamental difference. Is a debit card, when you make transactions, it comes out of your bank account. Credit cards do not. It's a buy now, pay later kind of system. Can I add that in here? Go ahead. Yeah, whatever. Anyway. So, charges will apply if you carry a balance on your credit cards. Fees and penalties if your payments are not timely. Again, all of this is going to be going over later on in more detail in a different class. But that is the fundamental difference from that. All right, that is it for this class. Homework is the post-test at the end of this lesson. And on that, on your post-test, post-class assessment, question number 5 that says, match the definition with the correct term, balancing and reconciling. Scratch that question off. Question number 5. You do not need to answer question number 5. We did not cover that, and we're not going to worry about it. All the rest of them are still required. And your additional homework assignment that we gave you last week is due next week, comparing the fees between 3 different banks, or 3 different bank accounts.
Do them both, or just one or the other? Because you gave
Oh,
us
just one or the other. One or the other. You just have it twice.
Because you got to grade the test anyway, so you might as well grade the test and then go back and look over it.
Sure. Whichever one you want to do. But do that, and I also recommend varying where you look. A good recommendation is check a large national bank like PNC Bank or Bank of America or whatever. Maybe check a small local bank like American Bank or Lindell Bank, whatever. Small local banks, and check a credit union. Make sure one of the ones you check is a credit union, because they're a little bit different, and you'll see that when you compare the fees and everything. They operate a little differently. If you're going to check a credit union, though, you have one additional step. You have to make sure that you can even get an account at that credit union, because credit unions require you to meet their criteria for membership, and it varies based on that credit union. So pay attention to that, too, when you're comparing offerings. All right, that's it. Class dismissed. Thanks, guys.